All right, guys. What is going on? What is Gucci gang? Ooh. Excuse me. But yeah, what is good, everyone? Welcome back. It's been a minute. It's been like almost a week, but glad you are still here, chat. Still here. What'd you guys do this weekend? We weren't here yesterday. I thought I was gonna make it back in time, but the thing is, bro. So, like, long story short, I had to be downtown Houston, right? And a friend of mine had court basically, and I was there for moral support, but it ended up like getting pushed back, and then they push it back by like 3 hours, and then now it's like for the afternoon and stuff, and it's like, oh shit, okay. So, but everything turned out well, and yeah, so that is the business. But we are here. Hopefully you guys are ready to go. What's good? Slowly G, Jorks, Capitalist, Eberneth, Elite, E, Robert, Jordan D in the chat. Welcome. Ready for another fantastic stream. Adrian, Miguel, Adam, Wrapped off the book of Numbers onto Deuteronomy. Yeah, there's definitely some verses over there. My friend. Now, the Pastor Ryan, on Sunday, he talked about David. So basically, in summary, how David did the work and did everything he was supposed to do before he was famous, when he was still just a shepherd boy or whatever, who was, basically unknown. Nobody knew who he was, and he was still praising the Lord. He was still doing what he needed to do, regardless of fame or anything like that. So, there's obviously a lot more to the story, but before he becomes king and all that, before he eventually kills Goliath, right? He grinded beforehand. So if David were alive today, he'd probably be printing charts and using pocket notebooks and stuff like that. He'd probably like the stream too. I don't know, but that's my guess. But who really knows? It's just speculation at this point. Speculation. Well, all right. I guess we can get into a few things. Okay, yeah, it was ES. That's right. It was ES that yesterday, or was it Sunday night? It might have been Sunday night, because I was looking at this before, because I had to get up really early yesterday. That was rough. I don't want to talk about it, but in short, no pun intended, we still had these lows down here, and I figured, like, in the back of my mind, I'm like, okay, this could be a sell model to go down here. But I did not think we would beeline straight there. You know what I'm saying? Thursday, manipulation. We spent a lot of time here on Friday. Couldn't get past this wick. Which can be graded if you never knew that. And so it sticks around the 50% level quite a bit. Can't get to the upper quadrant. Like I guess if you wanted to do this the other way, that'd probably be more appropriate. Just the wick, right? Grading the wick, and it hangs around the 50%. Can't get to the upper quadrant. That is a signature of weakness. And so to me, that was the low risk short, right? Anywhere in here. And then basically first leg and then second leg would be this to me. Now, obviously this is hindsight. I did not point this out to you yesterday, but looking at it, right? Looking at everything overall, that to me would be the second leg. Now, why do you think though? Why do you think that would be the second leg? In my opinion. Why do you think that would be the case, chat? Can't even get back into a premium here. Yeah, just the wick up here, just the wick. Whenever we have a long wick like that, well, I mean, you can technically grade every wick, but it's just like every imbalance. I mean, you can grade every imbalance and every inversion and every mitigation and every concept, even the inverted ones and the reclaimed ones. But you're gonna have so many levels on your chart, it's not even, you won't even see the candlesticks anymore. So like when we have long wicks like that, very small body, long wicks, you can measure that. You can price grade it. Sorry. You can price grade that, yes. Yes, sir. It can be, Adam, yeah. It can be. But don't forget the element of time as well. So if we go out to the daily, which arguably we probably should have started with, but I'm not perfect, obviously. Wednesday's close to Thursday's open. Right, see that little gap right there? Must have been all the overnight buyers somehow. Everybody bought when the market was closed, pushing price higher. That's how that works, clearly. So that gap being there, everything I already told you, that 1 hour price, you can actually grade this too, but I'll let you go study that on your own. Friday, reversal day. Monday, essentially shorting above the weekly open there, but you can see exactly what price does here. Does it respect that gap? Does it respect it? Chat. Does price dip in there and close above it or close inside of it? Or does price not do that? Remember, chat, I gotta bring this back. Remember, you gotta see what price does and what it doesn't do. Where does it go? Where does it not go? Where does it close? Where does it not close? Right, so it closed below this gap here. So the algorithm has no interest in utilizing that to take it higher. Right, so that would no longer be bullish. So what would it then become? If it ain't bullish, It's probably bearish. So you can see exactly what happened today. Today's the 18th. What happened today? Where's our high of the day? Where's our high of the day based on the daily time frame of TradingView? The high end of that gap right there. Interesting. Interesting. It's all just fucking supply and demand, right? There's a fucking supply zone right here for some reason that looks like supply to you, and then prices respecting that. Strange shit, man. Good old strange stuff here. See? Now, I'm not really one for grading every single wick. I think that'd be an okay study on something like that. Again, 50%. Like the bodies don't respect it, but it can't get to the upper quadrant there. Just outside the scope, and that's a small range too. That daily gap is like 3 points and 1 tick on ES. That's not a large range at all. It is all in the details, Jordan. It is. For someone who's been around as long as you would know there's a lot of details here. Oh yes, there is. So yeah, just outside the scope of that daily gap, which is fine on a 5 minute, 1 minute, even a 15-minute time frame. Trade lower. Bodies here all respecting the 50% of that gap. And then this morning, you can see equities is... Oh no, sorry, that's Asia. I got the wrong 830 on here. In Asia, we trade lower. And then equities. It's early morning, chat. Is fucking early morning for me. Equities is like right here. Then we had a lot of barcode. Left equal highs. Came down for the soup. And now we're in the middle of the range. This, to me, is trash. Okay? A lot of the times people are like, oh, price action sucks. 9 times out of 10, they're stupid. But in fairness, I think this looks terrible. Part of it is because of the range. Part of it is also because we have already completed the sell model. Based on all of this information here. Original consolidation, left it, traded into it, left it again. Bullish until manipulation. There's your manipulation. So everything here is bullish order flow, bullish price delivery. And usually... right, what was utilized for longs on the upside is going to be utilized for shorts on the downside. So, coming back to this gap here, see that Wednesday to Thursday? Right here. See that 3 p.m. to 5 p.m. right there, Wednesday to Thursday? See that gap? Okay, watch this. People think this stuff doesn't exist. Watch. See that? See that gap? That's the gap right there. And price spent a lot of time in there, even wicks like that, right? And then sends price higher. So that gap in the very, very short term, right, was utilized to go higher. Nobody's looking at that gap, dude. Nobody's looking at that gap as if it's going to be traded through and then utilized to go lower. Nobody does that. I ain't going to say nobody, but most people don't utilize that, or most people would not think to utilize something like that. But now you understand it, because in the grand scheme, your eyes didn't go there. None of your eyes went right there, unless you saw what I was pointing out to you. But you put 1,000 people into a room, 995 of them are not going to see something like that, because they're not trained to look for that. They might look at all this and go, oh, this is gobbledygook, this is a large range, this is Chop Nation, this is barcode, this is whatever. This is precision, you idiot. You got to look at the details. So That is why, again, for me, for labeling purposes, I would label that as the second leg of distribution. But coming back to what I was saying a minute ago, why I think right now, 12:22 Central on a Tuesday, why I think right now it sucks is because, remember, this is the higher time frame lows. We met in London, and then we met in regular trading hours. So we already have terminus for that sell model. So we have a soup on a large time frame and even a soup on a small time frame. Now I would like if we went for these highs, but again, it's the range here. Like, this range is not a large range. Okay, this is a 19 point range we've spent the day in. Terrible to me. That's terrible to me. So while we were in here before the stream started, I was looking at this like, okay, based on the soup, we should trade above that. But because this range is small, and if we were to look at this whole thing like consolidation, I would have actually wanted us to, you see how we trade up into these up candles like right here, and then price starts to trade lower? I would want us to trade lower and make a new low of day before going to these highs. The market doesn't have to do that, obviously. It can do whatever it wants. Okay, but I would make a new low of day first. So that's why. Higher time frame targets already been met. Small time frame set of highs. Small range on the day currently. That to me is just a recipe for mediocre trading at best. So what questions do you guys have so far? What questions do you have so far? Do you have anything so far? Have y'all ever even tried price grading before? Like, excuse me, grading a concept? Have y'all ever even tried to do that? It's not really something I talk about a lot. Usually like halfway. I've always told you, yeah, every concept can be cut in half. I've always told you that. But every concept, its halves have halves, which are quadrants. Quad means 4. Like a quad bike is 4 wheels. See how that works? And that information is useful. Now, going down this path, you can easily get information overload. That's true. You can get information overload with anything. But imbalance here, price dipping its toes above 50% is fine. Bodies actually staying in the lower quadrant there. And then you can see, in this case, lower. Another couple imbalances here, price can't get past, and then lower again. And that's what I mean. It's good to study this stuff. And then, oh, look at that fucking... Oh, must have been a supply zone, I guess. Well, now you know how to mark out the right supply zones. I guess. I guess so. Maybe. I don't know. I just make shit up every day. I just make it all up, chat. That's what I do. Just make everything up. Adam said, what are some must-have confirmations when it comes to the second leg of distribution? Well, I think one of the biggest keys to the second leg of distribution, or the second leg of accumulation, really doesn't matter. But number one, I would say, is the crossing. Okay? The crossing of 50%. Now, if you know Jesus, it wouldn't be hard to forget. right? The cross of 50%. Okay. That is an indication, right? If we have manipulation, we cross 50% lower going in the direction of opposing liquidity, i.e. equal lows or low resistant lows, that is a huge deal. Now, 9 times out of 10, I would prefer if we actually come back into a premium for shorts and then go. You don't see that here. Price was, again, for what I said earlier, we already crossed 50%, but then that daily gap showed nothing. So then that was once bullish, it becomes bearish. So now this is an inversion on the daily time frame. And that's what you see here. You would essentially be trading that wick to go lower instead of thinking it's going to come back up here. A lot of retracement traders, they look for that stuff. Oh, we're going to get a 618 retracement. No, you're not. If it were that easy and that simple, you would take a lot more trades than you do, but you don't, because you don't know where to put your orders in, or you don't know what concept's going to stay open and which one's not. You don't know if you're trading the first leg or the second leg of price delivery. You don't know, because you're not looking for that. I wouldn't say reclaimed. I wouldn't say reclaimed. The way that would work is if we just make a low here, get back above it, and then trade back into the gap to go higher. That would be the reclaimed. So no, it was the gap immediately respected that hour or 2 hours after to go higher. It was utilized. The algorithm utilized that because nobody thinks about fucking buying that. So it can't be supply and demand. Well, I guess it could be supply, but it ain't fucking demand. Okay. Then the algorithm does not utilize it here for longs. So it will be utilized for shorts. So when it is ready and primed to go to all-time highs, it may end up doing that. So, but I'm not one that constantly tells you, oh yeah, this should be respected first and then disrespected and then reclaimed. I'm not that good. Okay. I wish I was, but I'm not that good. One of the best things you can do, okay, is I think in the last 2 months or so, we've really been focused on the primary and secondary type entries. Right? Drop a 1 if you've seen any of those live streams. We've talked about primary entries. We've talked about secondary entries. We've talked about primary locations. We've talked about secondary locations. We've talked about primary targets. We've talked about secondary targets. Right? I think, and this is just me guessing, right? My guess is that where a lot of people struggle is they learn the primary stuff and then they try to get the primary stuff and they don't understand or look for the secondary stuff. When in reality, the secondary stuff has a little bit more probability behind it. So the range is so small today. There's really, like, the concepts here are just not, they're just not great. You know what I mean? But so, and that's diabolical, creating all these lows just above these equal lows. That's just, I don't even know what to tell you about that. All right, this is not a good example, but we're here and it's fine, I guess. Let's go down here. I was going to use the mitigation, but now I changed my mind. Okay. Let's say you have this imbalance, right? This is the last imbalance on the way lower, right? But you have a gap right here, right? We can all agree that that's a down close candle with no wick as well, no pants. Not that that matters, but in this instance, at least. And then this is where the open is. You see that cross right here? A lot of crosses today. It's Jesus knocking on the door of your hearts, folks. That's what it is. All right, so this imbalance with that gap, because that gap is there, we have to include it. We have to include it. All right. So again, something like that with the gap included. So that's the last one. So we trade through it pretty much immediately. And then it becomes an inversion rather immediately. Okay? Gap down. And the soup. Remember, I said yesterday, or yeah, we weren't here yesterday. Look at me. Last week and on the last couple of streams. Okay? One of the best things you can wait for is the turtle soup. Mitigations with turtle soup. Like mitigations post turtle soup. Ugh, phenomenal. Right? Yes. Again, I guess it's probably just more stuff I made up on the spot. Made up on the spot, chat. So that becomes an inversion here. Body's respecting it. This could be a... Let me give you an example. This here, right there. This down candle, okay? You see how we trade through this imbalance here at 1023. Then price trades down and into it. That to me is a primary entry. That's my opinion. It's a primary entry because you're basing it off of this as an inversion. And yeah, you would have taken some heat. 2 points. $100 a contract on the E-mini side. Okay. Body's respecting it. We trade outside of it. This could be a secondary entry because it's revisiting the concept. Do you guys see what I'm saying? Maybe this will help. I know it's hard to see and it's a 1 minute chart, but I think you guys get it. And it's this candle here, the one that trades back into it. So again, this down candle going into it, that's a primary entry to me. Right. This, right, up candle here, and then at 1027 down and into it again, that's a secondary entry. It's the same concept. It's just at different times. That's the initial, like trading down and into it. This is the second time. Now, if you didn't do something like that, or even after, like, let's say this candle, right? Oh, body's respecting it, getting in on the next candle. It's a new 5 minute candle, by the way, 1025 as well. Or maybe this gap here. There's a lot of stuff going on down here. But anyway, that to me, the inversion, primary and secondary entries. Now, you might be the type, well, John, I was always taught it's the last down candle before the up move. Well, that's wrong. But in this case, this is the largest body down candle. You do have 2 down candles in here. This is the largest down close candle. So just as an example, for example's sake, you could treat that like a secondary entry, because the lower entries are going to be the lowest buy, basically, at the inversion. Almost the Judas model. And then you see price like take off and you go, oh man, well, I'm not in, bro. I didn't take the trade. I didn't get in where I was supposed to. You're not supposed to do anything except your plan, bro. Now, sure, if that is your plan and you missed it, now you're going to give up the rest of the move because you want to be a little bitch, then that's fine. But for those of you that want to learn how to be elite then yes, you can look for secondary entries. And that to me would be here. Okay. Primary and secondary entries on the inversion. That right here could be a primary entry. Anything after that could be a secondary entry. Or this whole thing here could be a secondary entry after these. Because you saw price respect something. Because remember, price has been bearish pretty much this whole time. Left behind highs, imbalance, graded, can't close in the upper half. That's an indication. That's algorithmic. Okay, you don't need volume for that. You see a volume tool on my fucking chart? Nope. You can use it if you want, but you don't need it. It's not to be disrespectful, but you just don't need it. Lower, 2 imbalances, body staying in the lower one. Don't need volume for that. 2 imbalances, all the bodies and wicks respecting that. Don't need volume for that. It's the last one, I promise. And then lower. So price has been bearish this whole time. And you might be skeptical in the beginning. You might, well, man, John, I don't know. I don't know if the low's been set or not. It could. I don't know. So once you finally see, okay, things that might be bearish aren't, okay, that's when it's like, okay, yeah, we got our shift and stay delivery, and these were the early opportunities. And maybe you didn't, this is a 3-minute, 4-minute time window. Maybe you were making breakfast or something. I don't know. I don't know what you guys do. Definitely not read, though. You weren't reading, but maybe you missed it doing something, okay? That then becomes secondary entries for potentially those highs. But remember, as of our, ooh, look at that. See? Did we look at the volume below those lows to know that that was likely to get met? No. Sorry, that was the last one. Pinky promise. No more volume fuckery, okay? But anyway, when you are in a trade like that, right? When you are anticipating maybe those highs will get met, we're in a premium and we're at a concept that price, utilized earlier. So then you would expect, okay, do we trade above it and then treat it like an inversion? Or does price not trade through it? And usually, if you have a lot of contracts, 3, 4, 5, or maybe more contracts, usually something like this would actually be a partial, because you're partialing in a premium, right? If you're buying down here in a discount, this would be like exiting or partialing in a premium, even if you expect those equal highs. Because guess what? Price doesn't always beeline to your TP. Oh, it does on Instagram, it does on TikTok, but my trades don't do that. You think every trade that people take and record are going to beeline to TP, bro? No. Social media is a highlight reel. Okay? So it doesn't always do that. And then now here we are, back into the range again. So, but that was my main point. It's just a lot of people, I think, get caught trying to get the primary entries and they're not focused on the secondary entries, when a lot of times the secondary ones can be better. Honestly, you might not be getting as good of a price, but you could take less drawdown. And for some of you, that's amazing, because some of you probably take trades and take a lot of drawdown and you don't like that. I don't like it either. I don't think anybody does. But learning how to simply wait and watch, oh, well, this may do this. This might be the Judas model. You could take that. But if you don't, or if you aren't willing to risk it, then don't. See if that gets respected, and then trade something a little bit later. So, slowly would prefer the green line. Yeah. Well, the 5 minutes got a little gap here too. So that gap gets traded through and then trades back into it many, many times. So yeah, I'm telling you, man, like, brothers and sisters, I am telling you, you could sit down, okay? You could take your phone and put it face down or turn it off or whatever. You could just eliminate as many distractions as you could. Marcus Aurelius, right? Concentrate every minute like a Roman on what's in front of you. You didn't read Book of the Month because y'all don't read shit. And then, you know, wonder why you don't get the results you want. But you could sit down, remove all these distractions, and really look at these details. And I'm telling you, it's like a whole new world opens up for you. It's like a whole new world. When I hop on Counter-Strike, CS2, that's a whole new world, bro. Right? We're using util, we're throwing smokes and Molotovs and grenades and shit, and I'm opping somewhere and whatever. Like, that's a whole new world. We're immersed in that, you know? And you could spend an ungodly amount of time on video games. It's true. It's true. And you can do the same thing when it comes to your studies. You guys do realize that every time frame, it's going to display the same price. Like, that high is still going to be the high on the 1 minute, just like it is going to be on a 5 minute. But eventually, the higher time frame is going to be something else. But you could spend hours just on one chart on one time frame, looking at all the things I've already given you, and plus other stuff that we haven't mentioned today. You could grade the range. You could grade these concepts. You can look at mitigations and gaps, right? And all this stuff. See this gap over here? Right there. See that? Right there. Look at that. Oh, well, that gap, you know, who cares about that? Well, price respected it there and there. And look where price stopped a little bit earlier. When I was telling you, like, that's diabolical that they didn't go for those lows. They just left lows above these, right? But then what did price do after I said that? Those lows slowly got smoked. See what I did there? Anyway. And that's the stuff I'm talking about. It's like concepts that you might not think are important in hindsight. Go look at them. The same way that I showed you this daily gap up here. Way up here. Now, I don't trade Asia. I don't. I'm done. I'm playing Counter-Strike at this time. Or just doing whatever. But I'm not usually one to trade Asia like that. But to know that that's there is important information. Because you're going to see that stuff again and again and again and again. And you need to know how to use this stuff. If you want to trade really fucking well, you need to learn this stuff. If you want precision, okay, you need to look at it. So we could spend hours on one chart on one time frame. So imagine how much time you could spend on the same chart, or maybe like the same day, like ES, but then look at the 1 minute, look at the 5 minute, maybe look at a 15 or an hourly. You know what I mean? And it's just a whole new world for you. Opens up. And you start to see opportunities that you would otherwise not have known had you looked. So you never know. You never know until you try, chat. You never know until you try. So but that's it. That's all I got for you, man. You guys have any questions? Did you guys have it? Drop a 2 if you guys had a good stream today. Do you guys enjoy this stuff? Do you enjoy the details and the precision and the I guess just all of it together, like understanding the soups, right? The lows, and then the lower low below the old low, and then once the soup occurs, you know, that's when you get your shift and stay delivery and the secondary, primary and secondary entries, and then aiming for opposing liquidity and being on side in the market, maybe not getting the earliest entry, but still getting a early entry early on, understanding partials and body closures and price grading, and, you know, lows within the range, gaps within the range, and all this stuff. Appreciate that, E. Any plans on a masterclass? A masterclass about what? There's one that I do have planned. I have a lot of, bro, I have so much content planned, it's insane. But one thing I would like to do relatively soon, I don't know if I'm going to rearrange this or not, but I do have a outline for a masterclass video on mastery, actually. So, mastery in the sense of what it takes to master anything, because the principles are the same no matter what. But it's like a combination of goal setting and the mindset, practice, formlessness, right? Multidisciplinary, all these things. That's what I posted on my social media the other day. I said, this is what mastery looks like. Not look at me, look at these drawings I've made that this is mastery. No. If you actually zoomed in on the photo, you would see that there's a central image, and then the images around it are an extension of the middle one. It's a mind map of mind maps. And that's what it's based on. Mastery is in the middle. There's like 7 primary chapters, we could say. Like I just told you, like the goal setting and the mindset, those are 2 of them, right? Formlessness, that's the last one. There's 7, and all 7 of those have their own sort of mind map as well. So there's the 7 main chapters, and then each chapter has like 3 or 4 sub chapters, and every sub chapter has like 4 or 5 points to it. So it's this almost like a spider web of information that all relates to mastery. But I have to now take those notes and make them electronic, so that's what takes time. And I edit along the way too, just to make sure that I quote the right people and use the right references and the right examples and stuff like that. So it is a lot to do, but I like doing it, so it's not really work to me. It's just time consuming, because I'm also reading and trading and doing other stuff too. But that's probably going to be the next one. So, all right. Well, if there's no more questions, then that is going to be it. So hopefully you guys learned something today. Hopefully you did. We'll look at a little bit more. So here, let's do this. So the soup for ES was at 1022, and 1022 is here. So NQ was already higher, actually, and it souped at 1010, right? What a weird time. What a weird time indeed. 1022 is here. So again, by the time that ES is souped. NQ has already souped, at least on a small time frame. I don't think it met lows on a higher time frame. I could be wrong. You go look at it. We have two imbalances. This one is the lower one. And if you include the gap there, that becomes an inversion here at 10:15. New 15-minute candle there. Does trade back into it one more time. And then this is the mitigation. Didn't I say that a few minutes ago? The mitigations after turtle soup are like just the greatest. And we really didn't even look at Nasdaq yet. And there it is. So the soup, the inversion, the mitigation. It's just, I don't know. What would the target be on this? This is trash. This is almost a soup in itself. High resistant highs. This is trash too. Multiple higher highs here. But I guess maybe a 1 to 2 would probably have been all right in this case. But again, it's just a good example. When you study the low of day, when it occurs, not just when it occurs, but looking at the concepts around it, that can give you so much insight to price delivery. I'll show you one more thing and then we'll hop on. I wanted to go the full hour because I know I missed yesterday. I wanted to make it up to you. So you could say imbalance traded through becomes an inversion here, secondary entry here, and then that down candle here gets traded through at 10:21 and then 10:22 right there. See that? That could be a secondary entry as well after the inversion. Inversion, sending price higher, and then that right there, boom. And then that right there, boom. See that? See how none of these bodies are inside that? Interesting. Interesting indeed, chat. It's some serious stuff here, man. Some serious stuff. All right, we'll do one more. Sorry. I can't help myself. I'm just always so curious, chat. This is what you gotta be. Y'all ever read Curious George when you were a kid? That little monkey and the man in the yellow hat or the yellow suit or whatever it was. Curious George was always getting in trouble because he was just doing shit. That's how you gotta be. Stay curious, right? See that? See the same imbalance that becomes an inversion, right? Look at this. Price is allowed to trade to the lower end, but look at the bodies. They're respecting the lower quadrant. That's important information. Okay? You could price grade this down candle here. Where does it go? Where does it not go? There's your grades. Upper quadrant, midpoint, lower quadrant, the low end. It can't even get to 25%. It just taps into it, stays not just in the upper half, but the upper half of the upper half. That's massively bullish. But you wouldn't know that if you didn't look at it. You wouldn't know that. How do I know how to trust that mitigation? Because you can look at this other stuff and go, well, that's bullish and that's bullish. Okay, this might be a secondary or even a tertiary entry. But you already know what the function of a mitigation is. So now you're in alignment with smart money. Now you're in alignment with the algorithm. That's how you take good trades. That's how you take the best trades. And that's why you don't need to see anything else except for time, price, and context. Look at a candlestick chart. That's all you need. That's all you need. And yeah, Slowly, that's a great question. Yes. Anything in here could be an entry, or even here, or even here. But if you've entered already, yeah, the mitigation, that can be an add-on. Either one of those two can be an add-on. At 1023 or at 1025. Arguably, the 1025 one is better because, not because you can see it and it's like, oh, well, yeah, price took off after that. No. The 1025 one has a better element of time to it because 1025 is now a new, 5-minute candle. You see that? You see how it trades down and into that mitigation? You wouldn't see that mitigation on a 5-minute chart. It's not there. You know what else is here too? Sorry, chat. Y'all better remind me to end the stream because I promise you we can go all day. Kind of like your mom. All right, so right here's the last imbalance on a 5-minute chart that was utilized for lower pricing, right? And then look at this. That right there is near the low end of this inversion here. So that mitigation could be an add-on, or even like right here. Look at this shit. Look at this shit. How the fuck can this be supply and demand? How? This imbalance, right? And then the bodies are respecting the low end of that. Oh, how? How? What tools do you see? What tools do you see? Besides a box. That's all it is, a box. Look at this. Gosh. Man. How do y'all... The caffeine must have recently kicked in. How do you not get excited, dude, when you see this stuff? God, let alone trade it. How do you not get excited about this? Gosh. What else is there? Oh, there's a little gap too. Oh my Lord. It's all interconnected, dude. It's all interconnected. The Bible's the same way. It's all interconnected. But, you know, do what you gotta do, chat. But, God, how can you look at this and not just love it? How can you not love it? Makes no sense to me. Didn't I say earlier I would rather see a new low of day created before going for those highs? And what have we been doing? Trading lower, right? Oh. Captain Hindsight. At it again. That's all hindsight, John. That's all hindsight. Well, what did I tell you earlier before we even took those lows? I'd rather see us make a new low day first. Mind you, we're like 5 points lower. That ain't a lot. That ain't a lot. But that's foresight for you. Okay? That's foresight for you. But all right, man. Y'all be good. Be blessed. We'll be here same time, same place on Monday of next week if you're a freebie. Wednesdays are member-only live stream now, so I will see all the members here tomorrow. I will put out a market review later this evening, as well as the 20th. But for the freebies, I will see y'all again on the 24th. So if I do not see you until then, I gave you a bunch of stuff to look at today. I gave you a bunch of stuff to look at. Grading, secondary, primary, secondary, entries, when to long, when to take partials, grading, inversions, reclaimed, multi-time frame analysis. Like, dog, you'll learn to love it too. So, all right, I will see you guys next time.